digital trust. Our next session is dedicated to importance of establishing digital trust in the era of data analytics and AI. I would like everyone to either be seated or if you choose to switch to another concurrent session, please do so in the next 2 minutes. We will begin shortly. Ladies and gentlemen, at the back of the room, we would be commencing the session in a minute. We kindly request you to take your seats. I'd now like to invite the chair of this next session, Mr. Subhendu Kumar, Chief Actuary and Chief Risk Officer, SBI Life Insurance. And he will be joined by our speaker, Ms. Mitali Chatterjee, Insurance Research Manager at Swiss Re. Ladies and gentlemen, please give a big round of applause to Mr. Subhendu and Ms. Mitali.
Presentation or the PDF? Presentation, all right. A very good afternoon to all of you, and I hope you've all had a good lunch, but I hope the lunch wasn't that good that I'm going to put you off to sleep in the next 30 minutes. I realize it's the awkward time between lunch and tea, so please bear with me. And thank you, sir, so much for Okay, is that better? Well, I think I'm loud enough. Thank you so much, sir, for chairing the session. It's an honor and it's a great privilege to be here. So today I'm going to talk about the topic digital trust in the era of data and AI. Now, we are all aware about how increasingly digital our lives are, how increasingly digital our interactions are. But today I'm not here to talk about the technical side of things. I'm here to talk about a more foundational or fundamental aspect that drives demand for digital goods and services. And that aspect is trust. Okay, so a show of hands. How many of you here in the room are wearing a fitness tracker or a smartwatch or an Apple's watch? Okay, that's a sizable number. So, did you know that the Apple Watch can detect an abnormal heart rhythm, sleep apnea, diabetes, and hypertension with reasonable accuracy? So we are providing the smartwatch with data, sensitive data on our personal health, and we are getting back insights. So digital trust is a choice that benefits all of us, but it needs to be executed well. So now let me try and break down this amorphous and subjective concept of digital trust for you. A lot of organizations have tried to define trust in the digital context, and I'm going to stick to the definition given to us by the World Economic Forum, which defines digital trust as the expectation of individuals that their digital technologies will protect all stakeholders' interests and uphold societal expectation and values. Now, what I've done in the digital trust context is build a digital trust pyramid. And this pyramid consists of 3 zones. Each zone has 3 dimensions. So in all, there are 9 dimensions and 3 zones. So we begin with the reliability zone, which is fairly mechanistic. It's about dealing with the physical and mental constraints of trust. It involves providing an infrastructure that allows reliable and cost-effective internet access, easy-to-use interfaces which enable better and easier decision-making, and overcoming cultural and societal resistance in the face of digitization. Now, the next zone is the security zone. By now, we assume that access to digital and the ability to adapt to digital has already been sorted. Now, it's about the ability of users to feel safe and secure in exchanging data with other parties. the ability to feel secure with personal data, and protection against theft and attacks by third parties. And finally, there is the reassurance zone. Now, we are always making decisions today that impact tomorrow, right? And tomorrow is uncertain. Would we allow machines to make these decisions on our behalf? So the reassurance zone is all about creating trust in the ability of machines to reach decisions and conclusions autonomously, establishing social reactions with technology, and those areas of business and society which are still largely human to human. Now let's begin with the first zone, which if you remember was the reliability zone, and it's all about access to internet. Now, access to internet is not something that you should take for granted, because while many countries are doing great in terms of internet penetration, there are also many countries, particularly in Africa, South America, which don't have very high internet penetration. And here, internet access means not just the availability of digital infrastructure, it also includes the costs of accessing data. Now, why is internet penetration important? It is important because it correlates so heavily with insurance penetration, as you can see from the chart. Of course, insurance penetration depends on a number of supply side and demand side factors. It depends on things like overall development of the financial sector, income distribution, role of state in risk mitigation, regulatory support, etc. Digital trust also depends on a number of other factors. Now, these factors could be linked to political structures, socioeconomic factors, cultural identities, and other values. If you see the chart on the right, digital trust is very highly correlated with factors such as Global Innovation Index, regulatory quality, rule of law, government effectiveness, political stability, and real per capita income across countries. And here we are using the Digital Intelligence Index, which is provided to us by the Tufts University, as a proxy for digital trust. Another factor which plays an important role in explaining internet penetration, insurance penetration, and overall levels of digital trust is social progress in a country's context. Now, if you look at this graph, countries which have higher social progress also have higher internet penetration, and Nordic countries typically do better than the other countries along both these parameters. There are some countries, of course, like Saudi Arabia and UAE, which do well in the context of internet penetration, but social progress still remains suboptimal. Now, if you remember, the second zone in the digital trust pyramid was all about security. That means cyber resilience. And what better way to measure cyber resilience than the National Cybersecurity Index? So this chart maps National Cybersecurity Index across countries against digital trust proxied by the Digital Intelligence Index. Again, you see a nice positive correlation. And that's kind of obvious, right? Because customers do not want their digital trust to be abused. They do not want their data to be used outside of their consent or the storage of their data outside of their contract. So here's an short analysis I did. So I've been talking about digital trust and its importance. Now, for a moment, let's pause and look at the flip side of things. What happens in the absence of digital trust? And through the small analysis, I will prove that absence of digital trust and thereby misinformation and propagation of fake misleading news can be costly for an economy. And I'm going to prove this to you in two contexts. One is digital misinformation-driven climate change in action, and one is digital misinformation-driven rising burden of non-communicable diseases. So let's start with the first one. In order to do this analysis, I take a sample of 18 countries. These countries roughly constitute about 85 to 90% of the world's GDP. Then what I do is, for each country, I look at the percentage of adult population which is active on social media. What percentage of these social media users would probably be interested on news related to climate change? What percentage of this news or information available in social media on climate change is actually fake or misleading? And what is the probability of influence? By doing this analysis, I find out that the digital misinformation-driven climate change inaction would cost the world $37.5 billion, which is about 0.05% of the world's GDP. And this study was done using the assumption that the per person cost of climate change inaction, taking into account both cost to humanity as well as cost to economic growth, is around $15,000. I do a similar analysis in the context of non-communicable diseases. Now, as you know, non-communicable diseases include things like cardiovascular diseases, and a large part of it is actually preventable through lifestyle modifications, through diet, through exercise. News related to non-communicable diseases could often be fake and misleading. And there are studies which suggest that approximately 60%, 40 to 60% of all the news that is there available on social media related to things like diet, exercise, is actually fake and misleading. So using data on non-communicable diseases, years of life lost, or YLL, from the global burden of diseases, my analysis reveals that almost 26.26 million years of lives can be lost in the selected sample of countries due to digital misinformation. And when we aggregate this across all the sample of countries, that would mean an economic burden of 962.8 billion, or 1.1% of global GDP. So I hope I have been able to establish to you that digital misinformation is costly. Now, the second part of my analysis was to convert some of these qualitative dimensions that I have mentioned in the context of digital trust pyramid into quantitative proxies. Now, how do I do that? For each of the 9 dimensions that I have mentioned before, I use 3 to 5 parameters that could be good quantitative proxies. So, for example, access to data or access to internet can be measured by 4G mobile internet connections, fixed broadband subscriptions, etc. I do this analysis for across 120 countries, and then I do an analysis of variance to check for which of these 9 dimensions are relatively more important in the context of digital trust. And I find that cultural and generational attitudes, ease of use, and AI explainability are the 3 top factors which explain or which contribute to digital trust. Okay, so now let's try and dig deeper into why that is the case. So for example, let's take the case of cultural and generational attitudes. Now, countries where there is a high degree of interpersonal trust, where people trust their institutions, where people believe in the concept of transparency, social and environmental accountability, digital trust can be high. Conversely, digital trust can be low in countries where there is a high degree of risk aversion, political and institutional inertia, or higher susceptibility to things such as terrorism or natural disasters. Also, generational attitudes play an important role. Typically, societies which are older have lower levels of digital trust. So an internal survey that we did revealed that older age cohorts are often more reluctant to give share their personal data with insurers, even when offered a discount or a rebate. The second most important factor that came through in the analysis was ease of use, right? And that's fairly obvious because ease of recognition, navigation, obtaining information, and purchase may positively influence digital trust. And then finally, AI and automated decision making, which is slightly trickier because AI models often tend to be a black box for most consumers. You see the inputs going in, you see the outputs coming out, but you don't know what exactly happened in between. What was the mechanism that converted the inputs to outputs? So it's extremely important that the AI models are explainable, that the AI models are transparent in order to really bolster digital trust. And Scandinavian countries are one set of countries which perform well along all these 3 parameters of cultural attitudes, ease of use, AI and automated decision-making explainability, which results in higher digital trust. So this was a result of a clustering analysis we did, and our sample set of 120 countries were divided into 4 clusters. We renamed these clusters as advanced digital economies, emerging digital digital growth markets, high innovation digital markets, and low digital growth markets. What we did after that is map some of these clusters to independent third-party data that we took from the Ipsos survey, which asked the respondents this question, whether they trust companies that use AI as much as they trust other companies. And the results are somewhat surprising, because we find that respondents from advanced digital economies actually trust companies that use AI lesser than the other clusters, such as the emerging digital growth markets and high innovation digital growth markets, which clearly indicates that there is possibly some kind of a gap or a mismatch between what institutions think is important to establish digital trust, things like digital infrastructure availability or AI readiness, and what is actually important in the context of consumers to bolster digital trust. And these include things like ease of use, these include things like AI explainability. The third and the last part of the analysis was to check if we can prove that digital trust indeed plays an important role in explaining insurance outcomes, such as insurance penetration and insurance density. Now, in order to do that, for all the 100-odd countries, I've tried to compute a digital trust score. How have I done that? It's an interplay or an interaction between two things, societal trust score, and the second is digital infrastructure availability. In order to compute the societal trust score, I have taken into account 4 factors: trust in government, trust in businesses, trust in media, and interpersonal trust. Data on trust in government and businesses has been obtained from the Edelman's survey. Data on trust in media has been taken from Reuters Institute, and data on interpersonal trust has been taken from an Ipsos survey. Now, once I compute the digital trust score, I then look at the vulnerability score for countries, which is provided to us by World Risks Report that is published every year by the World Economic Forum. What does the vulnerability score indicate? It looks at various parameters such as geopolitical factors, such as socioeconomic factors, political factors, economic factors, all of these taken together to try and establish what makes a country susceptible to various types of shocks such as natural disaster. And as you can see from this graph, there is a nice negative fit between the vulnerability scores and digital trust scores across countries, which means that countries which exhibit higher levels of digital trust also exhibit lower vulnerability to global risks. As a next step, I have regressed vulnerability scores to digital trust score, to AI readiness, digital infrastructure availability, in order to take out the impact of all things digital and calculated the vulnerability residuals. And then I have regressed insurance density on the standard macro variables such as GDP per capita, age dependency ratio, literacy rate, etc. Also the vulnerability residuals that have been computed, and the digital trust we computed in the last slide. And the digital trust score is actually the variable of interest for us. And the results of the regression show that the digital trust score component or coefficient turns out to be not just positive, but also highly significant, showing that a 1% improvement in digital trust scores can result in the rise of insurance density by almost 76 points. The second piece of analysis in this is to try and look at the importance of digital trust in explaining insurance penetration. Now, in order to do that, I have used an ensemble learning approach, which is a machine learning method. Specifically, I have used a random forest model, which basically looks at, which tries to average out the predictions of individual decision trees and in order to bring more accurate results. Just like in a standard regression, we look at the coefficients. In this model, we are trying to look at the feature importance, and feature importance shows the relative importance of every explanatory variable by reducing impurity in that model at every node. So again, our dependent variable is insurance penetration. And these are the host of explanatory variables, the standard macroeconomic variables, including urbanization, literacy, age dependency, per capita GDP, internet access, inflation, unemployment, and of course, our variable of interest, which is digital trust score. And results show that while the feature importance for GDP per capita turns out to be the highest as expected, the feature importance for digital trust score is actually the second highest, which means that digital trust is an important parameter in explaining insurance penetration across countries. Now, to conclude, these are my key takeaways from the paper on which this presentation is based on. Trust is relevant for the continued digitization of insurance business. Things like cultural and generational attitudes, ease of use, explainability of AI models can play an important role in explaining digital trust. Countries that have greater digital trust scores also have lower vulnerability to global risks. And finally, digital trust is significant in explaining insurance outcomes such as insurance penetration and insurance density. And once this foundation of digital trust is established, the sky is truly the limit in the insurance context, because then it allows the insurance and reinsurance industry to digitize the entire value chain, to allow digitization to touch sales, data, ask risk-relevant questions during underwriting, and also provide customers with a seamless experience across the value chain, particularly in challenging times such as claims. What digital trust also does is allows us to cut through the silos, allows us to leverage the power of a variety of alternative data. This data could be coming from supermarkets, it could be the food purchase data, trying to look at various lifestyle risks associated with the food that we buy. It could be data from urban indicators such as mobility. It could be data on our wearables. It could be data from private surveys, from tech startups. It could be medicine purchase data from pharmacy. So no doubt, digitization is important. It's the way ahead for the society as a whole and definitely for the insurance and reinsurance industry. But we also have to establish that foundation of digital trust first. So with that, I end my session, and I'm happy to have your thoughts and feedback, both offline and online. Thank you so much.
Thank you, Mitali. Actually, Mitali has already used that AI and data. As you know, our last session, it's going in so nicely, people are involved, that we don't have got a chance to even discuss. So she has been rushed through the point. Otherwise, it could be one full day we can discuss on this. What is the trust in the insurance company based on the trust, and more so in the AI and the digital data. And as all of you must be knowing, I think a few days back, also Gartner has sent on reports that AI, which just take that biometric of face, deep fakes, it comes in such a way. Tomorrow people are not reliable into the actual face also. So there are lots of things are there, and everything starts based on this digital trust. It's a very topical part as the digitization, everything going on day to basis. But ultimately, which matters is the real trust. How is the unfairness, how the unbiasedness, how the transparency, how the accountability comes. All these digital parts really comes into the picture, and more so in the insurance company. And insurance company is based on trust. It's a very nice presentation. So if anybody has any questions, please, we may have a few minutes just to take it. Yeah.
Yeah, good presentation. So one slide you showed on non-communicable diseases, people losing lives due to false information on the digital platforms.
Yeah.
How did you gather that data?
So it's a filtering approach. So say I start with a set of 18 countries. Now I can find out data on the percentage of adult population that is on social media for all the countries. Then I can look at the percentage of social media users who actually look for information on diet and exercise. And there are studies which show that about 60% of social media active users are actually looking for information on diet, exercise, nutrition, etc. Using that, I can drill down further to the people who are actually looking for targeted news on diet and exercise. Then I look at what is the percentage of all these news and information which is actually misleading. And then there are further studies which show that roughly, on an average, about 40% of the news, 30 to 40% of the news is actually misleading. So then what I do is make that assumption that, say, 30% of the population could get influenced by this misleading information, and as a result, maybe stop following a healthy diet, or maybe stopping to exercise. Now, that would mean years of lives lost in medical terms, right? And Global Burden of Diseases provides extensive data on non-communicable diseases, years of life lost across every country. So using that, I can find the number of years of loss, And then since we already know that 1 year of life lost for an individual could result in economic impact in terms of, loss of livelihood or, the dependence, so it's a loss of income, right? So then I can find out, and loss of productivity as well. So I can find out the economic burden of this fake information or digital misinformation in the context of non-communicable diseases.
So the real bridge that you are creating, which is an assumption, is that how many people are looking at that targeted news and then taking decisions.
Yes.
But
yes.
you have no way of knowing that they have done that.
That's true. So these assumptions are based on behavioral study, articles and white papers, which talk about, roughly 3 in 10 people have the inclination towards believing anything that they see, and what they are seeing, if itself is misleading or false, then you can just multiplicatively find out what percentage of population is actually believing in the misleading news.
Okay. One last is that have you ever taken into account the cyber security laws, a legal framework, which can really increase or decrease trust?
So that's a good point, and probably scope for further research. In the context of this particular study, I have not used it, but that's an excellent suggestion, because that just forms another case study to look at in terms of what is the economic loss as a result of cyber breaches. And there are plenty of numbers available in literature, I believe, but I haven't done that in the context of this study.
Thank you.
Thank you.
Yeah, I think this is.
Hi, Mitali. Thank you for the presentation. So basically, when we are talking about AI and data, so given that we all are working in the insurance domain in different ways, we obviously want more and more information. But as a consumer as well, like every time we get that notification on our phone that would we like to share that additional information, we also want to protect our privacy. So that creates kind of like a conflict. And also in a market like India, where there's so much focus on not sharing too many details about it. Like 5 years ago, people did not even have bank accounts until the government kind of mandated it. So how do you think we can bring that change in a market like India? And how do we strike a balance as a person and also people who are working in insurance domain?
Yeah, so I think there are, first thing is its geographical proximity. If you look at all countries, in the South Asian context, they are similar, they fare very similar in terms of digital trust or the absence of digital trust. So it's not just about, you make progress along one indicator. Say you improve internet penetration and you will have digital trust, and digitization will move forward. That's precisely the point of the presentation, that there are multiple factors which are at play and which are at play simultaneously. So absence of one factor or presence of one factor really can't bolster digital trust. It has to be everything taken into account together. So it has to be better internet penetration. It has to be less percentage of cyber breaches. It has to be more acceptance from a behavioral perspective for us in the AI models that we use. But having said that, I would also want to leave you with a thought that just like too little data or too little, AI exercise is a problem in the context of some of the developing countries, too much data can also be a problem. And it can lead to problems such as anti-selection. It can lead to problems such as overlooking certain risks in your portfolio from an insurance perspective, just because you are too obsessed about data shows there is a high degree of correlation between something, say, like the BMI and number of people suffering from cardiovascular diseases. Because if you carefully look at data, you'll see that 47% of the people who suffer from cardiovascular diseases have BMI greater than 30, which also means that the flip side is 53% of the population who are being automatically included into your portfolio could be having pre-existing comorbidities and cardiovascular diseases without actually having BMI greater than 30. So too much data or too little data are both a problem, and you need to strike a balance in order to make these AI models and digitization and digital a success. Thank you.
Anybody else? Any other question? Or time is there, right? Okay. So I think thank you, Mitali. As all of us know, this is a very, very logical topic, and that's, as I said, it cannot be end to that line. You can catch her possibly post-break after the whole session is over. Just only before that, I want to tell all of you that whoever wants to get the compendium of the 23rd GCA papers, We have quite a few papers over here. You can collect that books if you want. Otherwise, you can go to the outside also, you can get this book. There are quite a few papers over there, okay? Thank you all.
Thank you so much, sir, and thank you all for being a lovely audience.
Thank you, Mitali, for your lovely research insights. I'd like to invite Mr. Abhijit Pal to please present the memento to Mitali and Mr. Subhendu.